Professors FM.
I'm Bridget Stomberg.
And I'm Lisa DeSimone.
And this is Taxes for the Masses.
Today's episode welcomes Andrew Sutherland, Associate Professor of Accounting at MIT, to discuss his research into the recent decline in accounting professionals.
Our sharp-eared listeners will recall an episode we ran in April of 2024 on the declining number of people studying for, entering, and staying in the accounting profession. This topic generated a lot of feedback, including a contingent skeptical as to whether the recent declines actually represent a shortage of accountants, as many public accounting firms will have you believe, or could be explained by other factors. In this episode, we invite accounting professor Andrew Sutherland to talk about his research into that exact topic. Hello, Lisa.
Hello, B.
We are back today to talk about how the number of accounting professionals has been in a steep decline over the past decade.
And to quote my favorite philosopher, who of course is the incomparable Yogi Berra, it's like deja vu all over again.
Your favorite philosopher?
I mean, if you can set a New Year's resolution to eat more cookies, I can call the late great Yogi Berra a philosopher, I should think. Thank you very much.
Okay, fine. I'm not going to argue in any way that's going to put my cookie resolution in jeopardy. So, all right. So if you're going to call him a philosopher, then what is your favorite Yogi Berra philosophy or, little pearl of wisdom?
Oh my gosh. It's too hard. It's too hard. There's too many.
You can do it.
I mean, you can't go wrong with always go to other people's funerals. Otherwise they won't come to yours.
Okay, that's pretty good. Now, question, was he serious when he said these things, or did he know he was being ridiculous?
To quote him, he says, I never said most of the things I said. So,
okay.
Yeah.
I'm not sure if that clarifies things. Okay. The plan for today is to revisit the phenomenon of declining accounting enrollment and professionals, but we're going to do it with a slightly different perspective today.
Yep.
We are going to very quickly rehash what we know about the decline, talk a little bit about some of the comments we received on the last episode, which, to be fair, I mean, it was like the most feedback we ever got on an episode.
There were several emails, multiple emails.
Yes. And then we're going to welcome a guest to help us dig deeper into the arguments behind that feedback that we got. Sounds like a plan?
Indeed it does.
All right, so why don't you kick it off and get us up to speed on what we talked about in the prior episode.
Okay, so we're going to stick just to the facts. Just
the facts, ma'am.
As Yogi Berra said, you can observe a lot just by watching. So we're just going to watch. I'll kick us off with some of the stats we talked about last time. All right, so from 2012 to 2022, enrollments in accounting dropped 16.9% on average. And many larger accounting programs like mine here at the University of Texas experienced even larger declines. Mm-hmm. That is larger than the 13% decline we saw on average across all undergraduate enrollment.
Okay. And the number of first-time candidates sitting for the CPA exam, that's the exam that you have to take and pass to be a certified public accounting, that number also declined 33%. From 2016 to 2021. So when we look in a slightly more recent time period, we see an even bigger decline in the number of people trying to become certified public accountants.
Yep.
Now, of course, public accounting isn't the only path for someone who has an undergraduate degree in accounting, because there's nothing we can't do.
There's nothing we can't do.
I mean, there's nothing we can't do. But nonetheless, the number of U.S. accounting professionals in 2022 was down almost 16% from 2019. So we're not seeing even steady numbers at any point in the career spectrum here.
Right. And as we said last time, some of that decline is also due to people who were already in the accounting profession leaving the profession. So we're getting it from both sides here.
Absolutely. That's right. We're not putting as much in the pipeline, and we're getting some leakage along the way. So you might recall during the Great Resignation of 2019 to 2021, we had about 300,000 accountants quit.
Yep.
And the average age of remaining accounting professionals is up there. And it suggests that a lot of these remaining accountants are going to retire pretty soon.
Yeah, the future ain't what it used to be. At least not in accounting land.
That's another yogi.
Yes.
Yogiism. Okay. Love it. All right. So all of that seemed pretty bleak to us. Those are the stats that we covered on the prior episode. And even more so when we cited a survey that said 99% of the country's top accounting firm management claims that they are unable to fill their current U.S. job openings. So they have a demand.
Yes.
And 99% of them are saying that they cannot meet that demand.
Correct. And so we're going to stop watching and we're going to start interpreting here. At least I'm going to say what we interpreted last time based on that stat. Mm-hmm. What we said was that it seemed like there was unmet demand and therefore there was a shortage of accounting professionals.
But we did get some listeners reaching out with some alternative interpretations of what is going on in accounting land.
Yes, I'm actually pretty thankful that our listeners are willing to reach out to us directly, and they were willing to reveal their identities to us because Yogi always said, never answer an anonymous letter. So we get to answer, we get to answer their letters.
Yes.
With this episode.
The listeners who did reach out were willing to point us to some other source material that we didn't know about, that we didn't cover in the first episode. And some of it is research that's being done by some of our esteemed colleagues, which we've looked at, we've digested, we've read. And interestingly, their work also relates to an episode we did on AI. Mm-hmm. And how that might be changing the accounting profession. So really, this is kind of a double dip because we're revisiting two past episodes in one. We're talking about this decline in accounting enrollment and in accounting professionals. We're talking about how AI, the robots, are coming for us. I think that's pretty clever. We're able to kind of do a bonus on two episodes.
You know what they say, when you come to a fork in the road, take it.
Yes. And use it to eat pie is what I would say. Today, we welcome Andrew Sutherland to the program. Andrew is an associate professor with tenure at MIT's Sloan School of Management. Andrew earned his PhD in accounting from Chicago's Booth School of Business in 2015 and has been at MIT ever since. His main research focus is on financial institutions, but Andrew has recently branched out to also delve into the intersection of technology and declining accounting professionals. Andrew is here with us today to talk about his paper titled Technological Investment and Accounting, a Demand-Side Perspective on Accounting Enrollment Declines. The study is co-authored with Henry Friedman at UCLA and Felix Vetter, who is also at MIT. Andrew, thanks so much for joining us on Taxes for the Masses.
Thank you, Bridget.
Yes, thank you so much for joining us, Andrew.
So, Andrew, to start it off, can you tell us a little bit about what has motivated your interest in this topic of the intersection of technology and how it's potentially affecting the decline in accounting professionals that we're seeing?
Sure. So a couple of things. One is that this is obviously just a huge issue facing our profession, and you can't go to any conference or any seminar without hearing people talk about it. And the second was I thought that, us as academics, we're kind of uniquely positioned to weigh in on this. Like this is a topic where there's a lot of conjectures being thrown around and often not a lot of evidence. And so I think as academics, we bring to the table, theoretical perspective, empirical tools, and also an independent take on what's going on.
Yeah, that makes a ton of sense. And, we did a prior episode on declining enrollments, mm-hmm. and we got some...
I was listening to it right before.
Perfect. Yeah, we got some feedback on it. But in that episode, we cite some of the same stats that you cite in the introduction to your paper. And so the explanation that a lot of people have cobbled together is that there's a shortage of accountants, and we could solve this problem if the accounting firms would just be willing to pay their employees a little bit more. And if we maybe scaled a little bit back on some of the licensing requirements, the barriers to entry in the field of accounting. But you and your co-authors instead posit a demand side explanation. So talk to us a little bit about that hypothesis and how it differs from what I just said, which is more of a supply side explanation.
Sure. So salaries are definitely going to be part of our story. I think it's useful to take a step back and define what both of these terms mean, like the supply side explanation and the demand side explanation.
Great. Thank you for volunteering to do that, because I was going to ask you to do it anyway.
That's what I heard. I heard a volunteer to do that for our listeners.
So the classic supply side story here is that there's a barrier to entry, and the common theme in these supply side stories should be that wages go up, right? It's not too different than what we saw during the pandemic when there was all kinds of supply chain problems, and then it became really expensive for us to buy computers and fridges and cars. So if you believe that there's a major supply side barrier that's driving lower enrollments, then what you would think is that, well, wages should be going through the roof. Whereas the demand side explanation, by contrast, it basically says that employers are sort of less willing to pay, at least compared to other majors, for an accounting graduate. And this could be because of technology. So think of all the new different types of software that have come out over the last couple of decades. Think of AI. And the idea behind the demand side perspective is that students are sort of watching this play out, that they can see that maybe firms are hiring fewer and fewer accounting majors and that the wages aren't as good as they used to be. And they're kind of making a rational decision about, should I choose an accounting major versus something else? And so to sort of disentangle between a supply and demand side explanation, one would look at wages and see, okay, are wages going up a lot, which would sort of more favor a supply side story, or are wages stagnating, which is the demand side story? It's easy to say, well, the employer should just raise wages. But I think the deeper question is, why aren't they finding it worth it to raise wages? Why aren't they, in a competitive market where they know that students are choosing between accounting majors and finance majors and studying all sorts of other things? What our hypothesis is that at least part of the reason is that they're finding ways to substitute for accounting labor.
Okay, so as you just explained, it could be that declining enrollments are either a result of a change in the supply or a change in the demand. And we talked about, in your data, you don't see wages going up consistent with what would be a supply side story. Tell us about the other evidence that you have that points to more of a demand side explanation other than just the salary data.
Sure. So part of this will be in kind of taking a close look at what the supply side stories are and thinking about how likely they are to explain the enrollment declines. So one that commonly comes up is the 150-hour rule. So the 150-hour rule was basically where states required candidates who were going to sit for the CPA exam to take an extra year of study. It didn't even necessarily need to be in accounting in most states. So it effectively added another year of education before you could sit for the CPA exam. And so, so states did this in sort of a staggered pattern. And it's natural to think if you add this extra year requirement, it's going to make accounting become less desirable. The recent enrollment decline started in 2015.
Okay.
The overwhelming majority of states implemented the 150-hour rule before, say, like 2005.
Yeah.
So just kind of from a smell test or like just the pure timing of it doesn't really line up with a story that would be explained by the 150-hour rule. The other part of this is that the 150-hour rule only affects public accounting, right? So if you wanted to go work and just be a controller at a firm and not go the public accounting route or not to get a CPA, or maybe you wanted to go into banking, you're not affected by all these licensing rules. And we find that around 80% of accounting majors in the census are working in something other than public accounting.
Oh, wow.
Yeah. So then it's sort of like, it becomes really hard to tell a story just about this 20% corner of the market explaining this really big decrease that we're seeing. It must be a lot broader than just what's happening with the 150-hour rule.
Okay. So back to your point about technology maybe playing a role, which is interesting because technology can make someone more productive. It can make them more valuable, right? You think back to the personal computer, right, and there was this view that like nobody would ever need this. And of course, all of us, like I'm sitting in front of two of them right now, right? And it makes me more productive.
Yeah.
But it could also, you're saying, substitute for my productivity. So can you talk a little bit about that? And like, why just accounting? Why not also finance?
Yeah, great question. So what we do in the paper is we sort of borrow this framework from labor economics from my colleague Duran Asimoglu in the economics department at MIT. The way that he thinks about this is that technology can both displace and reinstate labor in the production process. And let me kind of unpack that, because there's a lot of jargon in that. And so displacement is when a new tool comes along that replaces the role of labor. So TurboTax is a great example. It used to be that there was a human filling out those forms and that knew all the tax rules. And then TurboTax basically replaces, gets rid of the need for that human. That's the displacement effect. But there can also be reinstatement, which I think is something else that you're hinting at, that technology can actually increase the productivity of labor. So you can have cases where there are entirely new jobs that are created. And you sort of see this in a lot of the recent job postings in accounting, where they're talking about accounting employers valuing software skills, programming skills, big data analysis.
Yep.
And so then the question becomes, when you have technological development in a given sector, is there more displacement or is there more reinstatement, which is, again, the sort of the process of creating entirely new jobs?
So both can be going on at the same time. It's just a matter of which one is going to dominate.
That's exactly right. And so then let's sort of think about this for accounting majors. With AI and GPT, you could now have new jobs created where, it's your job to sort of program and check the AI tool. We see those jobs getting created. The issue is that I can think of way, way more examples of jobs getting displaced, right? So when we go back and think, what is the net displacement versus the reinstatement effect? There are so many cases of accounting tasks that existed 20 years ago that don't exist today. So these effects, they're not unique to accounting. Any job you can think of there being both reinstatement and displacement potential. I think one of the deeper issues here is that accounting in a lot of firms is a cost center. Okay, it's essentially a lot of accounting that gets done is compliance oriented. And the way the firm is going to think about it is that, this is a cost center. I'm going to just try and minimize the cost. And so when you have new technology that comes along that lets you automate things away, it sort of makes sense to me that you would see fewer accounting jobs being created than, say, finance jobs or jobs for other disciplines.
So then back to some of those stats, why are the accounting firms complaining that they can't fill their positions?
Yes, this is the question I really was looking forward to getting your opinion on, because in my role, I talk to recruiters, on a weekly basis. All they are talking to us about is how they need more accountants and they want to hire more accountants. What do you think is the explanation for why accounting professionals are using the word shortage themselves?
So this is a very fair question. We don't doubt that in some corners of the market there are shortages, but it's sort of like the Jerry Maguire quote, like "show me the money," right? The question that I would pose, and I have posed this to recruiters, is it used to be that, say, back in 2005, 2007, this is back when I was in consulting, and we would be hiring accounting majors. The going salary, the entry-level salary for consulting versus professional, public accounting versus banking was pretty similar. It used to be that accounting firms were willing to pay sort of the going rate for a fresh graduate with an accounting major. Today, that's not the case. I mean, if you look at what our graduates are getting who go work for Amazon or go work for any of the investment banks, they're getting significantly more. And so when this shortage is brought up, I think you have to ask the shortage at what price, right? Like if I go to 10 Mercedes dealers and I offer $10,000 to buy a Mercedes and they say no to me, should I say that there's a shortage of Mercedes, right? Or is it just that I'm offering, a non-competitive price? I think to some extent, this is what's going on with the labor market, is that it used to be that the accounting firms would pay a competitive, and competitive in the sense that it would be a similar salary to what someone would get to go work for Microsoft, go work for Amazon, go work for Citi or Morgan Stanley 15 years ago, but now that's not the case. And it kind of leads you to this deeper question as to like, why has the willingness to pay that price gone away?
So they're experiencing a shortage from their perspective, but that shortage is occurring at the price that they're willing to pay.
Exactly.
They'll hire all of our graduates as long as they're willing to take that $55,000, $60,000 a year. They're not willing to pay the 80 or whatever it is that you might get going into finance.
That's exactly right. Yeah.
And that's based presumably on how much productivity they think they can get out of that labor, right?
Yeah, and I think you guys both discussed this quite nicely on the earlier podcast about the same topic. Is there's offshoring opportunities. It's not just that I can rely on software and AI. It's that there's also the ability now to have a team abroad do this work.
Yep.
I've heard from at least one person in public accounting that they have decided not to compete on salary anymore. It's been conscious decision that they've made because in their minds, this generation is valuing things other than salary. So one of the public accounting firms is really trying to push the benefits of being a CPA. So they're trying to demonstrate that an accounting degree is giving those students value, just non-monetary.
And so I guess kind of getting back to the earlier question of, what about these other supply side stories? I don't doubt that prestige and like job flexibility and stuff is not something that enters into the mind of someone choosing an accounting major. But these features, I don't think, have changed all that much in the period that we're looking at.
I will say, I didn't see any discussion of the effect of the movie The Accountant in your paper. That did come out in 2016. So I think that's a pretty big confound that I'd like to see you address in the next round, because that certainly did not do anything to help us.
We've got reviewer 2 on the line here. Okay, all right. We'll have to do something
Wolf of Wall
that.
Street was 2013, and they put out a much better product than The Accountant did for us. So
damn you, Ben Affleck.
Yeah.
But in all seriousness, I mean, the AICPA and there's this national pipeline strategy group that's looking at all these issues, and they put a lot of emphasis on selling the positive features of the accounting profession. And
yes,
I don't doubt that those features are there and that we should be advertising them. I'm not so optimistic that that's going to make a huge difference, because this has always been an issue. Accounting is never going to be, sexier or more flashy than, say, a tech job or some of the finance jobs. I guess I'm just skeptical that this is going to have a first order effect on reversing the decline.
So that kind of, begs the $1 billion question, which is what should we be doing in accounting to reverse this decline? What should we be telling people who select into accounting because they actually like it and that's what they want to do? We get questions from students all the time. Is AI going to take our jobs? Is technology going to take our jobs? What's your answer?
So there's a few answers here. I guess I'll start with on the more negative side. I mean, it may be that we just need fewer accounting majors. And you sort of see this in the data. If you plot the number of universities that are dropping their accounting major, it's gone down the last decade. And the number of universities that are starting a new accounting major compared to other historical periods has gone way down. So I think there's some right sizing that's already happening that addresses this. On the more positive side, like you see the programs, the accounting programs that remain, AI and data analytics are becoming a really big part of it. I mean, a lot of our colleagues at other schools are teaching, not intro financial accounting or intro managerial. They're actually teaching a data analytics class. And so this all links back to the Acemoglu framework of, okay, if we want accounting to create jobs, if we want technology to create more jobs in accounting, then we need to think of ways to make it more complementary to the technology. And so these efforts by schools to introduce, data analytics into the curriculum, AI, other tools like that, I think kind of speak to that. The other thing I'd add here is that, we're only focused on technology as being kind of a driver of accounting labor demand. There's a lot of other drivers of accounting labor demand. So if we were to have new regulation, and I'm not calling for new regulation, anyone who knows me know I wouldn't be calling for new, more securities regulation. But if you look at sort of after the Sarbanes-Oxley period, so starting in 2004, there was a big increase in accounting majors because the firms needed a lot more. And so if we were to have new sweeping accounting, securities regulation, then that would send a signal to students that look like this is going to be an area where the firms are going to need a lot more help to get the compliance done. That could be something that would increase enrollment. And then the other important development in all of this is ESG, right? So let's say ESG reporting takes off in terms of more firms are adopting it or it becomes embedded in our securities regulation. Well, you're going to need a lot of accounting labor to kind of deal with compliance. And so new developments on the regulatory front in terms of just standard securities regulation or ESG related reporting could help reverse this trend. But I'm not necessarily calling for those types of regulation.
Well, thank you so much for joining us. We really appreciate your willingness to talk about this and hope that some of your explanations and answers speak to some of the feedback we got on that prior episode where we didn't talk about this demand side hypothesis.
Oh, just again, I appreciate the opportunity to talk about our research. It's been really fun. And I think it's an important topic. We should be having these conversations.
Thank you so much.
Yeah, thank you.
All right, time for the good, the bad, and the ugly. And, standard fare when we have a guest on the episode is that guests are great, guests are fun, and this was a perfect fit. Andrew was the perfect guest to talk about this intersection of technology and declining accounting enrollments. And I'm really appreciative that he made the time.
I am too. And I also really like how he laid out the different economic fundamental perspectives that you could take, right? We had talked about the supply side, calling it a shortage. He's talking about demand side, basically saying, there's this alternative view if we go back to the basics of economics. And I really liked that. I think it was good to get back to fundamentals and talk through these perspectives in a way that was rooted nicely in economic theory.
And I think that it's very nuanced, and I like the way you summarized it, and Andrew agreed. There is a shortage at this level of pay, or there is a shortage at this level of demand. It's tricky, right? There are so many things that go into this situation, and Andrew pointed out at the end, there's no one silver bullet. There's no one thing that's going to fix it. And I sometimes wonder if that's how the accounting firms feel. Like, yes, I could raise the salaries, but given all of the other impediments that accountants face that finance majors don't, would I start having to pay more than I pay a finance major to compensate for the uncool factor and the 150-hour factor and all of this stuff? So I think the takeaway for me is that it's more nuanced, or it is nuanced, and there's no one explanation for what's going on.
Yeah, I agree with that. That being said, I do think the focus on technology that Andrew and his co-authors have in their paper is really interesting. And I didn't get this sense from reading the paper, but I liked how our conversation with him evolved to basically say, like, yes, it's kind of hitting accounting hardest right now, but it's probably coming after the finance and other, like, it's going to be everywhere. We know this, right? AI is going to be everywhere. Technology has already changed the economy and our lives drastically over the last 30, 50 years. And it's just going to continue as technology continues to evolve. And so I liked his focus on technology. I thought that was very timely and interesting.
Agree. And not only is it timely and interesting just for us to think about as people who are interested in this, I think their paper, their study provides some really useful takeaways to accounting educators. So I think it's interesting to us as accounting educators because they're highlighting some things that accounting programs can do to help set their graduates up for the best success in a career in accounting, and how we can graduate students who are not going to be so easily replaced by technology, so that we can give our students the tool to fight that displacement that he talked about and be more on that reinstatement side. Okay, ready for the bad?
No, but I know I can't keep it from coming.
No, we have to do it. And it does relate to the technology piece of it. And something you kind of touched on a second ago, but it is a little depressing that technology is impacting accounting earlier or maybe a little bit differently than it's impacting some of these other fields. Do you have any thoughts on why that is? And do you think it's going to continue to be that way with the continued growth of AI?
That's a big question. I think there are a lot of things at entry-level positions across the board that can be replaced by technology, not just in accounting, but everywhere. It's just that I guess there's also, as you progress through the ranks of accounting, we've found more and more of those things at higher levels of the work that can be replaced as well.
Okay, ugly. What do you got?
I mean, just the fact that this is the first I've really heard of the demand side argument. Everybody defaults to the supply side.
Yes. So given the response that we got from our first episode on this topic, something tells me that we may hear more from our listeners about this episode. And I am going to encourage anybody in public accounting who is listening to this episode and who has some answers for us on how you all are viewing it. And do you think it's a shortage? And if it is, have you had discussions about raising salaries? I would love, we've got our perspective. We've got a really solid academic perspective. I would love for someone listening to this from a public accounting firm, let us know. So anybody is welcome to give us feedback, but I'm particularly asking for feedback from someone from public accounting. And this is not an ugly thing at all. This is a good thing. We should have done this at the top. Yeah. We love hearing from you. So please reach out to us at taxnerds@gmail.com. Tell us your thoughts. And who knows, maybe there's a third episode to be had on this topic.
You know, Yogi Berra said it ain't over till it's over.
I did not know.
Well, that's all we have time for today.
Be sure to join us for more tax nerdery on future episodes of Taxes for the Masses.